Hi, my name is Drew Moore, and I've got Michael Reginelli, a risk advisor for advanced trading, as well as our economist, Brian Basting. And today we're going to talk about the November WASDE USDA report. As of this taping, corn futures in the nearby month are up 8 cents. January soybeans are up 32 cents, and December wheat is up 10 cents. With that being said, Michael, first question to you. What stood out on the balance sheet for corn today?
Pretty muted report on corn. I think it was mostly as expected. They bumped the yield, half bushel per acre. I think a lot of people in the trade were looking for that. There's a 43 million bushel increase on the production side of the ledger, but it was offset with a 50 million bushel increase on ethanol, which again, a lot of people also expected. So ethanol going up. They did leave exports alone at 2.5 billion. I think that's going to be a point of contention as we go forward. A lot of thoughts that number is going to come either higher or lower, depending on if China buys. And lastly, on the world stuff, the world corn stocks number actually came in above the high end range of expectations, which wouldn't necessarily lead us to believe that we needed a big bullish pull out of this report. But at the same time, it's something for consideration.
Sure. Brian, how about on the soybean side of the complex? What stood out to you there?
Biggest surprise, Drew, was the U.S. crop production. The government actually reduced the size of the U.S. bean crop compared to last month, reducing the yield by 0.3 of a bushel. No one in the trade was expecting that. All the trade estimates were higher compared to October, so that was a surprise to the market. The other thing I think to note is that the USDA did lower the Argentina soybean production estimate by 1.5 million tons, and they did increase the Argentina corn production estimate by 1 million tons. So it looks like the composition of South America is changing, but for the soybean market, I would say, Drew, is more of a relief that the market was looking for such of an increase in the production and an increase in the carryout. Carryout for the U.S. was only up 20 million bushels from last month.
Sure. As we head into winter and specifically next spring, all eyes are on corn and soybean acres. The USDA baseline numbers stated 92 million acres of corn planted next year, as well as 87.5 million acres of soybeans and 49 million acres of wheat. Do you feel like that's fair, all things considered right now, or just too busy of a moving target to hit?
It's a great question, Drew. I think those numbers are possible. I'm not sure yet that the market is there yet today at about a 2.25 November of 22 beans to December of 22 corn.
Sure.
I'm not sure that's given that big incentive yet to switch back to corn from those original intentions. That'll be something that we're going to work out probably the next 90 days or so, all the way through winter as we see those South American crops develop. But those numbers are certainly possible, i.e. a substantial increase in the corn acres and a reduction in beans. I'm just not quite sure yet that the market is quite at a level that will convince farmers to get to those numbers.
I would agree. Michael, question for you. What are your thoughts on cash markets here moving forward and spread implications based off of what you know and what you've seen today?
Sure, yeah. I don't know that the report today changes a whole lot from a spread structure standpoint. We're kind of at the tail end of harvest. We're getting this crop put away. Sure. Ethanol margins are very strong. We continue to see really strong basis in the interior. A lot of questions on will the export pool for corn continue to be supported. Right now, those values are fairly strong as well. So there could be some tension on the back end of the corn balance sheet, especially with carryout slightly tighter today. Bean carryout did increase today, as Brian referenced, maybe not as much as the trade was thinking, but we have very strong processor margins on the soybean side of things. It looks like that's going to continue out along the curve. The one caveat is Brazil's getting planted early. It looks like they're going to have record production coming at us, maybe earlier in the season than normal, which could deplenish some of the U.S. demand as we kind of look forward on the curve.
Makes sense. Let's not forget to talk about wheat. What stood out to you on the wheat complex today, Brian?
The USDA did reduce, Drew, the U.S. exports of wheat compared to last month. That's a function of larger crops this month in Russia, also an increase in exports in Europe, and so we're looking at more competition worldwide. And it also add in that the competition is also increasing from Ukraine. So we had larger exports forecast for Russia, Ukraine, and the EU. So the U.S. exports right now remain the residual world supplier. Although the world fundamentals for wheat are quite tight, we're still looking at export-wise, we're residual suppliers. So I think the wheat market is going to be very dynamic, Drew, going forward. We're looking at very tight stocks, particularly of spring wheat going forward. So there may be some intra-spread dynamics there between classes that right now continue to favor spring wheat.
Sure, sure. Inflation-wise, Michael, the chatter continues to persist as we see it both, physically and more discussion in the marketplace. We've seen a lot of new fund length here as well in corn. How do you think that plays out here moving forward?
It depends on a few different things. So the U.S. dollar has rebounded pretty healthily from 4-month lows.
Sure.
If we start seeing a big pullback in the dollar, that's where you could create a lot of space for funds to continue buying this thing up, kind of to the levels that we saw in 2009, 2010.
Sure.
Today, it feels as more of just kind of a macro hedge. We're certainly far off the levels that we saw this summer from a length standpoint, but commodity funds still do look like they have a slightly bullish view here. So I think we just have to see kind of how things play out from a macro sense. But right now, it does look like they'll maintain some semblance of length. But it's likely going to be tough to kind of achieve those midsummer levels, at least for a period of time.
Sure, sure. All right. Well, thank you very much, both of you, for your time today, and have a great day.